Good morning, everyone. Good morning, everyone. So we'll start from where we had stopped. Yesterday, I told you that we are discussing capital gains, and if we need to compute tax on capital gains, first and foremost thing that we need to have is we need to have a capital asset, and without capital asset, we cannot do anything. We are also seen what is the meaning and definition of the word capital asset. Okay, we have seen how to classify a asset on short-term basis and on long-term basis. Uh, just to revise, Kranti, can you just tell me how do you classify a short-term capital asset and a long-term capital asset?
Sir, within 12 months, it's a short-term asset.
But is it for a physical asset or for a financial asset?
It's a financial asset. Sir.
Okay.
More than 12 months, it's a long-term asset.
More than 12 months, it should be a long-term asset. Okay.
Long-term.
What are the other things for physical assets?
Physical asset, it should be less than 36 months, sir.
For?
Physical asset.
No, but I'm saying whether you want to classify this as a long-term asset or a short-term asset. What is it?
Short-term asset, sir.
Okay. What is this trademark that has come? Okay. And for long-term?
More than 36 months, sir.
Okay, fine. No problem. Tanas, can you tell me what do you mean by indexation? Yesterday I told you what is indexation. I was explaining you this part. Can you tell me what is indexation? Tanas, are you there? Gautami, can you tell me what is indexation?
Yes, sir.
Yeah,
So
tell me.
indexation is the physical asset was purchased a long year back ago. So it the amount can be reduced. The taxable amount to be paid can be reduced under capital.
Okay, but what is indexation? It is just nothing but it is adjusting to the cost of inflation. That is what we call as indexation value. Okay. So we have seen yesterday what do you mean by indexation, right? And now we will go ahead and discuss some more aspects as far as difference between short-term capital gain and long-term capital gain, right? So we stopped at point number 3. We'll go on to point number 4. Okay. As far as point number 4 is concerned, in case of a long-term capital asset, what happens is you under normal first let me explain. Under normal computation of tax, you first arrive at gross total income. Okay. And after you arrive at gross total income and before you arrive at net income, there is something called as deductions. Deductions can be under section 80. Okay, ranging from 80C to 80U. Whatever deductions are applicable, all those deductions can be taken care of or should be assigned the appropriation values, and then we arrive at net income. This is what we have already studied. I think in your previous classes you have seen this. In your previous classes you have seen, just a minute, something is wrong here. In your previous classes, you have seen that we always take into consideration the deductions that are applicable, and then we give due regards to deductions, and then we arrive at a value. But in case of long-term capital asset, what happens is there is nothing called as deductions that are applicable as far as long-term capital assets. So for long-term capital assets, since in case of long-term capital assets, what happens is, since long-term capital assets are charged at flat rates, there are no deductions available under chapter 4a. That is, no deductions are available under section 80C in this particular case. Okay. So long-term capital gains have one benefit, that is benefit of indexation, and because they have the benefit of indexation, they are charged at flat rates, and because they are charged at flat rates, that means they have no deductions applicable as far as chapter 6a, that is under section 80C to 80U. Deductions are not applicable as far as long-term capital gain. Likewise, there are some provisions, there are some exemptions available, but those exemptions are available under section 54, okay, up to 54GA. So we have 54, 54B, 54D, 54EC, 54ED, and 54F. Okay, these are the main sections wherein deduction exemptions are available, but they don't have any exemptions or they don't have any deductions as far as section 80C is concerned. Under long-term capital gains, under short-term capital gains, since they are charged at normal rates, that means we charge these gains as normal taxes, that is 5%, up to 5 lakhs, no income tax, 5 lakh to 10 lakhs, 5%, all those rates are applicable. For such cases, all short-term gains are charged on normal rates, and because they are charged on normal rates, deductions under chapter 6a are applicable or available for the benefit of the assessee. Likewise, even though deductions are applicable here, some more exemptions are also applicable, but they are applicable only to a restricted area of section 54B, 54D, okay, and two more, that is 54G and 54GA. If you look at the exemptions in these two columns here, there are more exemptions applicable as far as long-term capital gain, but there are less number of exemptions applicable for short-term capital gains. The reason is, here you don't have any deductions applicable for long-term capital gain. Here you have deductions as far as short-term capital gain. That is the reason fewer exemption limits are available under section 54 for short-term capital gain, and more number of exemptions are applicable under section 54 for long-term capital gain. Likewise, these two parts are also equally applicable. Here deductions are applicable, here deductions are not applicable. I'm repeating it once again. From exam point of view, this is a very, very important question. Please make a note of it. Difference between short-term capital gain and long-term capital gain. These are very important. This is a very important point of difference. Usually this question has been asked for 3 marks. Yeah, any doubts in this, understanding this point? Any doubts in understanding this part?
No, sir.
Nothing? Okay. We move on to the next one. Now, there is an important term that we have to understand, and the name of that term is called transfer. Okay. What happens is, if you merely give a capital asset for use to somebody, it will not be called as a transfer. I'm repeating my words. If you give any capital asset for use to any other person, it will not be called as transfer. It will be called as you are renting out that particular capital asset. It happens, right? You have a house is a capital asset. Until and unless you sell that particular house, in other words, until and unless you transfer that particular house on somebody else's name, okay, if you don't do this particular act, then it will not be called as a transfer. In other words, if you have a house which is vacant for a very long time, and if you allow that particular house to be used by somebody, and for that you are charging a certain amount, we will call this particular amount as rent for that particular house. In such case, even if the tenant is using that particular property, it will still not be called as a transfer of property, because here the property is still in your name. So if you really want to sell a particular capital asset, there has to be a transfer. Now here what we are trying to understand is what is the meaning of the word transfer is what we are trying to understand, right? So what does it say? Transfer means there should be a sale. Okay, please remember these points are very important for us to understand. Otherwise, the whole concept of understanding capital gain itself fails. Clear? So, if you really want to have a transfer, first thing is you need to have a sale of that particular asset. If not sale, there should be an exchange. If not an exchange, there should be a relinquishment. That means you give the old one and you, in place of the old one, you get a new one. You don't pay any money, but you give the old one and you take the new one. That is also called as a transfer. Generally, this thing happens in case of gold. When you're selling gold, you give 10 grams of gold and you get another 10 grams of gold. So that is called as relinquishment. Okay. Exchange means you give the old one, you buy the new one by paying a nominal amount, by paying the difference amount. That is what we call as an exchange. Clear? So sale, exchange, or relinquishment should happen for any asset to be called it as a transfer. If this condition is not satisfied, look for the second condition. It should be extinguishments of right. That means, say for example, let us take the example of a you have been given the right to do excavation in a particular iron ore mine. I'm just giving a hypothetical case. You have given the right to excavate iron ore from a particular mine, and the time limit is 1 year. So in 1 year, what amount of excavation that you do is left up to you. After 1 year is over, after 1 year over, you don't have any right in that particular mine. So what happens? You are transferring that particular right to mine to somebody else. That is what we call as relinquishment, extinguishment of right. Okay. Another simple example that I can give you is, suppose you have taken a car on a loan, and for some or the other reason you are not able to pay the installments for that particular loan. In such case, after a certain period of time, the bank will initiate legal proceedings and it will declare that from this day onwards, because you have not paid the money, you have no right over this particular car or this particular asset. That is what we call as extinguishment of asset, extinguishment of rights. That means you don't have any right over that particular asset, and that is the reason the moment your right stops, from that point of time the transfer takes place. Next is compulsory acquisition. Sometimes I think I can clearly give you an example of what happened to the famous villa of Vijay Mallya in Goa. The court declared that since he is not able to pay the money back, they ordered State Bank of India for compulsory acquisition of his villa in Goa. That means Vijay Mallya was given time to repay the money to State Bank of India. State Bank of India was unable to recover the money from Vijay Mallya. Therefore, they filed a case in the court, and the court gave an order that since Vijay Mallya is not able to pay the money to the bank, there should be a compulsory acquisition of his villa. That villa should be sold out and money should be recovered by State Bank of India. So in this particular case, the court gave an order. It was a compulsory acquisition. The court gave an order, and that is the reason the transfer of asset took place. Clear? Next, transfer can also happen in your own company when you convert capital asset into stock in trade. Okay, this is a capital asset that you have. If you turn this capital asset into stock in trade, then also it will be called as a transfer. For example, suppose you are in the business of supplying sand and cement. I'm giving an example. Suppose you are in the business of selling sand and cement, okay, and you are living in a particular house. Okay, you are living in a particular building, and there are 3 or 4 flats that are owned by you. Suddenly you feel that now that I have good experience in the construction industry, I will become a builder now. The moment you declare yourself that you are a builder hereafter, whatever is your capital asset, that means whatever flats that you have in your possession, okay, these assets were called as capital assets when your nature of business was a cement and a sand supplier. But the moment your profession changed from a cement and sand supplier to a builder, all these capital assets that you had, that is your flats that you had or the property that you had, automatically became stock in trade, because that becomes your inventory. Because for a builder, inventory is nothing but empty flats. okay, or vacant plots or buildings is nothing but inventory. So that is stock in trade. So whenever such thing happens, it will also lead to a transfer. Next is maturity or redemption of zero coupon bond. I hope you know what is a zero coupon bond. It is a bond issued by the government of India, or for that matter, state government or central government or any other uh, central authority. These bonds do not have any interest payments. On the other hand, they are issued at a very steep discount, and they are redeemed on maturity on the face value. Okay, what does this mean? Suppose I have a bond. The face value of that bond is 1000 rupees. I am telling you that I will issue this particular bond at 100 rupees. You pay 100 rupees now. 5 years down the line, you can take back your 10,000 rupees. So here I am not offering any interest, but I am offering a discount on this particular bond, and that is the reason I call this as a zero coupon. Coupon means interest. So if I'm not paying any interest, it is as good as I'm paying zero interest. And because I'm paying zero interest, nobody will come and buy that particular bond. So in that case, if I have to attract you to come and purchase that particular bond, what I need to do is I have to make this offer very lucrative. In other words, I will offer a discount on the bond, and if I offer a discount on the bond, you will come and purchase this particular bond at 100 rupees. I will ask you to keep this bond for 5 years, and at the end of 5 years, I will give you your 1000 rupees. Now, when you withdraw this 1000 rupees, okay, withdrawing your 1000 rupees is called redemption of zero coupon bond, or maturity or redemption of a bond. So when you take this 1000 rupees, when you take this 1000 rupees back, we will call it as a transfer of capital asset, or we'll call it as a transfer. Okay, whether it's a capital asset or whether it's a current asset, we'll see it later, but there is a transfer. Next is any transaction involving the possession of immovable property or a part of performance of that particular contract. Generally, the last point is, wherein cases have been filed in the court, and because of for immovable property, and the case proceedings, the court gives a decision that the property goes to X and does not go to Y. Whenever this thing happens, we will also call it as a transfer of property. Clear? Again, from your exam point of view, the definition of the word transfer is important. Please look into it. If you have any doubts, please raise the doubts. I'll clarify the doubts here itself. You need to understand the word transfer very, very clearly. Any doubts in this case?
So can you please explain the relinquishment again, sir? I just missed it.
Relinquishment is basically when you exchange one thing. You see, there are three things. One is you sell it. You have a two-wheeler, Rashmi. You sell that two-wheeler. You have used that two-wheeler for probably 5 years. Now you sell that particular two-wheeler. Whatever money that you have will be a profit for you, or it could be loss for you, whatever. But there was a sale of two-wheeler. So here you sold the two-wheeler. So we'll call it as a sale. What is an
Yes,
exchange?
sir.
What is an exchange? Exchange means you give one thing and you take something else by paying the difference amount. Generally, I think this happens on Flipkart and Amazon. When you exchange your mobiles, they tell you that
Yes,
there's
sir.
an exchange offer, a mobile which is costing around 12,000 rupees. You decide to purchase that particular mobile on Flipkart, and you buy that particular mobile for 12,000 rupees. You also want to exchange your mobile. The valuation of your old mobile comes to around 2,000 rupees. So what is happening here? You are exchanging one goods for the other, right? In other words,
Yes,
you
sir.
are buying a new mobile and you are giving off your old mobile. At the same time, you are paying the difference amount of 10,000 rupees. Are you able to get my point here?
Yes, sir.
Same is the case with relinquishment. Generally, in case of relinquishment, you don't pay any money. It is replacement for cost to cost.
Yes, sir.
Okay. In exchange, you pay something. Okay. Whatever, even if you pay 1 rupee, it is still an exchange. But in relinquishment, generally, I'm saying generally what happens is you don't have to pay money. It is something like a
Yes, sir.
barter system. I give you wheat of 50 kgs, you give me rice worth that particular amount, or that particular worth of 50 kgs. That is what we call as relinquishment.
Yes, sir. Got it.
Okay. Sale is you don't exchange anything, you pay everything out of your pocket. Exchange is you pay something out of your pocket by exchanging the old item. And in relinquishment, generally you don't pay, but you replace it by something else of equal value. That is what we call as relinquishment.
Yes.
Okay. Yeah. Anything else?
So,
Yes.
in the last point, sir, one more that it is considered transfer of rights in immovable property by way of becoming a member of the society or any organization.
No. Here it says transaction involving possession of any immovable property as a part performance of the contract. I'll give you some example. Okay, let us suppose, Rohin, you have purchased a house or you have purchased a plot. Okay, a plot is a
Yes, sir.
capital asset. Okay, and you have
Yes, sir.
purchased this particular plot. Okay, you have purchased this particular plot on a condition that you don't have money, so you borrowed money and you purchased this particular plot on one condition from the lender, that in the next 10 years I will repay the money. Rohin, you're getting
Yes,
the
sir.
situation? You have
Yes, sir.
purchased
Yes,
a
sir.
plot, you don't have money, so you borrowed money and you purchased this particular plot, and the condition that was agreed between you and the lender was, I will repay the money in 10 years along with whatever interest that you decide. The lender says,
Yes, sir.
I agree on one condition, that in the next 10 years, if you don't pay, the money, whatever plot that is there or whatever land that you have taken will automatically get transferred in my name.
Okay.
Getting it?
Yes, sir. Yes, sir.
Now, here you have 10 years to repay that particular loan. You do whatever, you see to it that you will pay the loan. In case if the money is not paid in 10 years, as per the contract that you have agreed, that property will automatically be moved from your possession to the person from whom you have
Lender.
borrowed the money. So this is another
Yes, sir.
performance contract that has to be honored. Getting it?
Okay, sir. Yes, sir. Yes, sir.
Right. Yeah. Anything else? Okay.
No, sir.
Uh, this is we have to understand all these parts very clearly, because uh, this can be asked sometime. Now we have to go section by section. So what I will do in this particular today's class, I will just take this particular slide and will stop it. I will go slow, but if you don't understand anything, please stop me and tell me. This is important, because these questions always come as 8 marks or 10 marks questions. What are special transfers in terms of capital gain? Okay, this question usually comes if this question arises, this slide and the next slide is your answer. Okay, fine. So we'll see what are special transfers. Special transfer means, these transactions appear like transfer, but they are not actually transfers. Okay, so let us see what are these. Or shall I do one thing? I'll give you 5 minutes. Just read through this first. First, read through this particular slide. Then I will explain you point by point. Okay, just go through this particular slide first.
So what's the FVC in the fourth column?
FVC stands for fair value consideration.
Yes, sir.
And here this FMV stands for fair market value.
Market.
Sir, we need to write this all including those sections.
Preferably, but if you are not able to remember the sections, no problem. See,
Okay,
we are
sir.
not lawyers and we are not chartered accountants. But it is equally important as MBAs, we need to understand the exact meaning of the terms. That is the reason we focus not on sections, but we focus more on the meaning, how to interpret the meaning of that particular phrase.
Okay, sir.
So sections, if you are able to remember, well and good. If not, don't worry. Okay, done.
Yes, sir.
Now, if you understand this particular slide, it says what are the different types of transactions that can lead to transfer. So here we have a regular transfer of capital asset. Okay. Here we have a asset, a capital asset, which is damaged and for which insurance money has been claimed. Okay. So in such case, how do we arrive at the fair market value of that particular asset? Is you have to first thing is that you have to look is in the previous year in which money has been received or the asset has been transferred. Usually what happens, I'll just give you this example. Suppose I have a hotel, okay, and I have made very good interiors in that particular hotel, and suddenly one night, because of short circuit, there is a fire in my hotel, okay, and everything is burnt out. Somehow I am able to control the fire, but the damage is substantial, right? Now, in which year has this damage taken place? Let us assume that this damage has taken place, okay, the damage has taken place in let us say yesterday itself. Yesterday night the damage took place. So yesterday's date was 21st October 2020. So yesterday there was fire, the fire was dozed off, but there was substantial amount of damage, and now I put a claim in the insurance company saying that I have been paying premium regularly, there is a damage to my property, I want compensation. So what will happen now? Those assessing officers from the insurance company will come, they will look at the damage, and based on the damage that I have, they will release the money. Okay. Or if the situation is so bad, if I think that the building cannot be repaired, the hotel cannot be restored, what will I do? Whatever condition is there of the hotel, I will just sell that particular hotel for whatever money that I get. In such case, in such case, what you need to check is in which year, in which year was the insurance money received or the asset was transferred. Has it happened in the previous year is what you have to check. If it is happened in the previous year, only then we can arrive at the fair full value of consideration or the fair value of consideration. But here the damage has taken place yesterday. So when will this entry come? When will this entry come? Can you tell me what will be the previous year if the damage has taken place yesterday night to my hotel? To get the damage or to sell the asset, my previous year has to be 1st April 2020 to 31st March 2021. This should be my previous year. Only then I will be able to arrive at the full value of consideration or the fair market value of my other assets. That is what I have to check. So first thing is, whenever you receive any money or whenever you sell any asset, that particular asset has to be either sold, transferred, exchanged, or replaced in the previous year. Point number one. If after doing that, if you cannot assess the market value of that particular asset because of the damage, then you have to arrive at fair market value by looking at other assets. That means probably in that area, okay, there could be another hotel of this particular square feet. Okay, so tentatively, what could be the value of my asset? That is what we call as fair market value. It is not the final market value, it is a fair market value. Okay, and based on that fair market value, my consideration will be generated. That is what we call as under section 45 subsection 1 subsection A. Are you able to get the logic here? I repeat once again. I had a hotel. The hotel was had good interiors of wooden. It caught fire. The hotel was damaged. Damage was substantial. Insurance money can either be received, or if I feel that the insurance money is not sufficient enough to restore the hotel, I may sell that hotel. Now, if in either of the cases, I have to check whether I have received money in the previous year or have I sold that particular asset in the previous year. If these two conditions are satisfied, only then I will be able to arrive at what is the value of my hotel. Achha, if you are not able to arrive at the value of the hotel because of the damage, then you need to arrive at fair market value of that particular hotel. How will you arrive at fair market value? In your area, wherever your hotel was there, look around what could be the tentative valuation of other hotels in that particular area, and based on that, we can arrive at fair market value of your hotel. Are you able to understand this? Any doubts in understanding this?
So if you get the fair market value, then the price will be taxable as a capital gain.
Yes. Now that depends
Yes,
whether it is
yes.
a capital gain or whether it is a capital loss.
Capital loss. Yes, sir. Yes, sir.
We don't know whether it is a capital gain or capital loss, but it will be a transfer. That much we know.
Yes. Yes, sir. Yes, sir.
We are not talking about gain or loss here. We are just talking about transfers.
Yes, sir. But it will be taxable.
It will be no. We don't know if it will be taxable only if there is a gain, right? If it is a loss, then there will no.
Yes, sir. If it is gain.
Yes, if it is a gain, then there will be some amount. There will be taxation on that. No doubt about it.
Yes. Yes, sir.
Okay.
Hello, sir.
Yes, sir.
Yes, Swapnil.
So when you said you want the fair market value and you are comparing some other hotel, but our hotel, I mean, your hotel is already, it's damaged. So how we can compare other hotels?
See, always remember, valuation is done not on the hotel. Valuation is done on the land. Building
Okay.
is always depreciable assets, but land is never a depreciable assets. So whatever valuation happens on the square feet of your hotel, not on the built up area, but happens on the square feet. In other words, we call it as carpet area.
Okay.
Got it. So suppose I'm Swapnil, you are from Goa, right? Swapnil, you are from Goa, right?
Yes, sir.
Tentatively, what could be the square feet rate, the place where you live? Say somewhere around 4,500 square feet. 4,500 rupees per square feet would be
Yes, sir.
the rate.
Yes, sir.
Right? Now, if there is a damage to the
Yeah.
property, wherever you live, there is a damage to a property just besides your house, whatever is the building, can I assess the market? Can I assess the valuation of that particular property depending on what is the valuation of your house? I can definitely do it, right? I'm not saying this is the final value, but I can definitely say this is fair market value. I'm not saying full.
Yes, sir. Based on the land.
I can say it as a fair market value, right?
Yes, sir.
So that is how we have to understand. And One more thing, please don't get confused between whether there will be a profit or whether there will be loss. We are not worried about that. We are worried that in such case there will be a transfer. We are answering only the question of special transfers. Okay, next one is, quickly we'll move through it. When you convert a capital asset into a stock in trade, what you need to take into consideration? Was that asset been converted into stock in trade in the previous year? If the answer is yes, then you have to look for fair market value on the date of conversion. That will be your transfer. That will be the date. That will be the value of your transfer. Next, the same thing applies when there is a transfer of shares by the depository. Only thing is, here you have to look for FIFO basis, that is first in and first out basis. Okay. Anyways, this part is of no use to us as of now. Okay. Next is transfer by a partner to a firm by capital contribution. Any person who comes into your business as a new partner, he brings along with him a certain amount of capital with him. So what you need to take, has that capital been transferred in the previous year? If the answer is yes, whatever is the value of that particular asset that is recorded in the books, that has to be considered as the fair value or the final value of transfer. And last one is distribution of capital assets on dissolution of the firm. Whenever a firm is stopped, discontinued, has that firm stopped in the previous year is what you have to check. If the answer is yes, what is the fair market value of the assets that have been transferred? That is what you have to take into consideration. Suppose 3 or 4 of you are in a partnership firm and you decide to discontinue that particular firm. That firm has some assets. So in which year did you stop that particular business? That has to be taken into consideration. That you have to consider as a previous year. And then in that particular previous year, who took what type of assets and what was the amount of assets that each one of you took from that particular company is what you have to find out. That is the fair market value of transfer. Okay, we'll stop here. We'll continue in the next class. Okay, today I'm giving you assignment on tax and investment. Okay, please adhere to the timelines. I'll tell you what to do in that particular assignment. Please keep on referring to the WhatsApp group. Everything will be posted in that particular WhatsApp group. Clear? These are handwritten assignments. You have to write those assignments and submit to me in the form of a PDF. You should mail it to me at whatever email ID that I will send it to you. Is that okay? I'm stopping it here.
Yes, sir.
Wait, because I need to take attendance. There are 2 people who are not there. Can I know who are those people, please? Is Ganesh here?
Sir, Nabiraj, he is absent, sir. He is on family. He is with family, sir.
And one more?
No, sir, no idea.
Nabiraj is absent.
Sir, Dhanashri.
Dhanashri was there, right?
Sir, yes, sir, her network problem is there, sir. She can't connect. It's disconnecting.
Because I thought
Yes, sir.
coming up. Okay, so it is only Naren, who was that person?
Nabiraj and Dhanashri. sir.
Nabiraj.
Nabiraj. Okay, fine. So we'll stop here. We'll continue in the next class.